Hello everyone. Welcome to the last AIR webinar series for the start of the 2025. In today's webinar, we will summarize the market situation in 2024 and find out what movements will occur in various asset classes in 2025. In addition, we will look at the economic data that caused large and small volatility in the market over the past week, and also conduct technical analysis on major instruments. Before we start the session, I would like to notice some of our disclaimer that this presentation is for the information purposes only, and any information relating to investments should not be considered as advice or endorsements, and any point of view is the presenter's personal opinion only and does not reflect the views of Exness. Okay, so today's table of content is as follows. In the first part, we will check which asset classes showed what movements last year in 2024. Especially, we will look at the movements of the dollar and various currency pairs following the Fed's monetary policy shift, and the rise of the big tech stocks following the Trump's victory in the US presidential election, and of course, the explosive rise in the Bitcoin price as well. And next, in the second chapter, we will check what areas we should pay attention to in 2025. Especially, we will briefly look at the tariff policy that President Trump will initiate in the future, and the resulting the inflation problem which the United States faces right now, and the movement of the dollar and the treasury yields according to the Fed's future monetary policy directions. And lastly, we will forecast future price movements through technical analysis of major currencies pairs and major instruments by LiXing. And let's take a closer look at which assets showed significant volatility over the past year and what kind of events does affect the asset prices. The first thing to look at is the explosive rise of the Bitcoin. In 2024 marked a decisive year for Bitcoin, with the cryptocurrency market reaching new peaks despite the numerous unexpected volatility. And from the groundbreaking regulatory changes to market-shaking political developments, Bitcoin's journey has been completely unpredictable in 2024. And at the beginning of the new year, Bitcoin got off to a super brilliant start, gaining positive momentum in the expectations of the approval of the Bitcoin spot ETF in the United States. And after a month of some kind of anticipation and expectations, the US SEC approved approximately 10 spot Bitcoin ETF in January from major players like BlackRock or Fidelity. And this was evaluated as a super game changer. And these Bitcoin ETF not only made Bitcoin accessible to the institutional investors, but also attracted billions of dollars in net inflows, driving the Bitcoin price to a new record high. And despite Bitcoin's strong start, 2024 was also a year of some kind of several difficulties. And the biggest one came in March when you guys will probably remember the FTX founder, Sam Bankman-Friedman, was sentenced to 25 years in prison and, if I'm not mistaken, fined $11 billion for one of the largest financial fraud cases in the US history. And while the market has already endured some of the fallout from the FTX collapse, these legal consequences have had a lasting impact and have led to a mid-year correction of the Bitcoin prices, as you can see from here in this chart. And Bitcoin's recovery starts to begin with the Fed decisions to cut interest rates in the third quarter of 2024. However, it was the political drama related to the US presidential election that really put Bitcoin on an upward trajectory. So, Bitcoin prices, excuse me, Bitcoin prices soared after former President Donald Trump promised pro-cryptocurrency policies during the campaign and declared that he would build Bitcoin reserves and pursue cryptocurrency-friendly policies in the United States. In November, Bitcoin hit all-time high, and Trump's election victory served as a powerful catalyst for the Bitcoin prices, Pushcoin the Bitcoin up to $100,000 in December, and it recorded its best performance of the year, which is 2024. And Bitcoin was not the only one that has shown a steady rise over the past year, and gold prices also continued to rise. And in particular, especially the Fed interest rate cut, geopolitical tensions, and some gold purchases by major central banks further encouraged the rise in Bitcoin prices. And gold prices, which showed strength throughout 2024, received like additional upward momentum as uncertainty about next year's monetary policy was highlighted very much, and especially after the last monetary policy meeting of the year on the 18th. And this year, the gold rally continued due to the emergence of geopolitical risks, increased demand for gold from central banks around the world, and the monetary policy easing from the central banks and inflows into gold-linked ETF products. And the market predicts that gold will continue to rise this year and into 2025 as demand for safe haven will continue to flow. And we will look at more details in the later slide. And oil prices did not show much volatility in 2024. WTI prices rose only 0.1% compared to the previous year, which was 2023. And most of the factors that limit the oil supply due to geopolitical risks have already been reflected in prices. And as concerns grow that the Trump administration will rapidly increase the US crude oil supply, the demand for the oil trading appears to have decreased significantly in 2024. And especially concerns about the oil supply have decreased a lot due to the possibility of an end to the war in Ukraine under Trump and the progress of a ceasefire in the Middle East area. And additionally, the sluggish economy of China, the largest importer of the crude oil, may also serve as a factor limiting the rise in oil prices, not only through 2024, but it is possible will also proceed until 2025 this year. So, what will the market situation be like in 2025? There are various risks, including the Trump's full-fledged rise to power and the resulting tariff risks, and of course, the possibility of a resurgence in inflation, as well as pessimism about the Chinese economy and the possible trade war between the United States and China. Basically, the market expects Bitcoin to see additional gains this year, riding on the Trump administration's commitment to the cryptocurrency environment. And the Tom Lee, Fundstrat CEO, recently predicted that the Bitcoin price will also rise to $250,000 this year in 2025. Virtual asset management company also said, and the institutional banks such as Standard Chartered also predicted that the Bitcoin will easily reach $200,000 by the end of 2026. And the main reasons for those who are optimistic about the Bitcoin's price continue to rise are the relaxation of the regulation following the launch of the Trump administration's and the participation of some kind of institutional investors in the cryptocurrency market. And the skyrocketing price of the cryptocurrency following the election of the President Donald Trump is due to the excessive regulation carried out by the SEC under the Biden administration in 2024. And additionally, as you might already know, Paul Atkins, whom the Trump dominated as a Gensler's successor of the SEC, is a cryptocurrency friendly figure and holding the position that the cryptocurrency are very important to the US economy, opposing excessive regulations of virtual assets and emphasizing the need to introduce the cryptocurrency related regulations, and is working with the incoming the Trump administration. And changing the SEC's regulatory stance appears inevitable. So legal risks related to the securities, which have long been obstacle to the growth of the cryptocurrency assets and cryptocurrency related businesses, and institutional investment in cryptocurrency are expected to be greatly resolved, which could bring a tailwind to the cryptocurrency market in the second Trump administrations. However, as you can see, there are not only positive aspects with the Bitcoin and the overall cryptocurrency market. And with the emergence of a large number of profit taking on Bitcoin, which has risen sharply, the possibility of significant volatility in the entire Bitcoin market, I mean, entire cryptocurrency market, cannot be ruled out. In addition, doubts about the cryptocurrency related policies promised by the Trump and some kind of disappointment that may arise after they are actually announced and promoted may have a negative impact on the Bitcoin and overall cryptocurrency market. Some say there is a need to look at cryptocurrency from a more long-term perspective, because with so many variables affecting the current Bitcoin prices, it is very difficult to set the decisive and firm expectations about the Bitcoin prices. So it is very important to note that adding too much risk into the Bitcoin for the current market prices and from a short-term perspective can destroy your entire portfolio. So please be aware of this. And the biggest concerns for the market this year will be the Trump's presidency and his like tariff policy. In a meeting with reporters after taking the office in the White House today, he mentioned that he would impose a 25% tariff on Mexico and Canada around next month in February. And this is expected to result in a sharp shift in global trade dynamics and some kind of various problems. And another important thing is whether the Trump administration will impose an import tariff of about 60% on China. And some believe that it is unlikely that Trump will impose a 60% tariff and that he will only use the tariff as a weapon to extract the maximum benefits toward the United States. And if the imposition of a 60% tariff on China is being realized, I mean, actually realized, a trade conflict between the United States and China will be inevitable. And the possibility of a resurgence of inflation in the United States due to rising prices of imported goods from China also cannot be ruled out. And it is also worth noting that if inflation rises again due to the United States tariffs, this will put the brakes on the Fed's path of rate cuts, which could further strengthen the dollar and which could also strengthen the treasury yields, and it would ultimately harm uh, the risky assets, the prices. Okay, so what will the US stock market look like in 2025? And over the past year, in 2023 through 2024, the US stock market has seen a huge rise thanks to the expectations about the AI from the big tech companies such as Magnificent Seven, and including the NVIDIA, AMD, or etc. And in addition to the explosive rise of AI chip makers led by NVIDIA, the progress of the Magnificent Seven companies uh, seeking to introduce AI in earnest has also been very notable. And in addition, the corporate tax reduction that will be announced after the Trump's inauguration will have a decisive impact on the increase in profits of not only the big tech companies, but also to the small and mid-sized American companies. And it will also drive the rise in stock prices of them. And this chart shows the CAPEX trend of Magnificent Seven companies. And CAPEX stands for the capital expenditure and the payment with either cash or uh, credit to purchase long-term physical or fixed asset used in the business operations. In other words, companies with high CAPEX spend liberally on innovation and liberally on infrastructure after they have paid for the operational expenses and distribute dividends to the shareholders. And as you can see from this chart, CAPEX is expected to peak in 2025. And of course, doubts remain as to whether the US stock market will continue to rise next year. As you already know, selling off of the major big tech stocks with historically high valuations has increased significantly and notably since the end of last year. And this suggests that the Trump administration's tariff policy and concerns about the US debt rising to the historical levels are stimulating risk aversion sentiment. And as time goes by, profit-taking sales, the increased profit-taking demand on big tech stock prices may also increase and pulling down the stock prices, overall Nasdaq prices. And let's look at the situation of the Bank of Japan and the movement of the yen's valuation. The Japanese yen has shown great volatility in 2024, and various factors, including the Bank of Japan's monetary policy moves that ran counter to the Fed's and fears of selling the yen, increase the Japanese yen's volatility. In that respect, the movement of the yen this year also needs to be viewed with a high degree of concentration. And Japan is feeling pretty uneasy about the America First policy that kicked off with Trump entered White House. And the Japanese government is especially worried that the US nuclear umbrella, which is crucial for their security, might get weaker as Trump starts having direct talks with China, Russia, and even with the North Korea. As you can see from the news, like Bloomberg or Financial Times, Trump made a call with Xi Jinping, the Chinese PM, and he also talks with Putin, the president of the Russia. And with all this uncertainty going on, everyone's really watching what the Bank of Japan will do about its future interest rate policy. And right now, most of the Bank of Japan's policy committee member seems to want to raise the interest rates, but it looks like any final decisions will depend on how the market trends play out in the future, like what does the President Trump says in the future, and how the global stock market will react, and also how the exchange rates will react in the future. So if the Bank of Japan ends up with putting a hold on raising interest rates for any reason, the Japanese yen, which is already trading at its lowest against the dollar since 1990, could take an even bigger down hit for now. Okay, so I think that is all for the macro fundamental parts. And from now on, LiXing will take the mic and will guide you to the technical analysis world. Thank you.
Thank you, Enki. Right, so let me just share my screen. So from now on, we will take a look at technical analysis. So if you guys have any questions or any instruments that you would like us to take a look at, right, please just either type it under the questions chat or also the webinar. Okay, so we have a question or request for gold, right? So we will take a look at gold chart as well as and also dollar index, right? Given how Inky has covered on the recent Trump's moves, as well as all the decisions that we have coming up. Okay, so let me just share my screen, right? And also, if you guys cannot hear me clearly or see my screen, right, please just sound it out in the chat box. Okay, just give me one moment. Okay, I hope that you can see my screen. Right, it should be showing the Exness web terminal. Okay, so can you guys see my screen clearly? So on my side, I can't seem to be seeing how it looks like. It's just pitch black. No? Okay. That's strange. Okay, what about this now? Right, so this should show the Exness web terminal dollar index chart. Are you guys seeing that on the screen? Okay, thank you so much, Sat. Right, awesome. Okay, this is great. Thanks, Inky. Okay, so yeah, so we'll take a look at dollar index first, right? Just from the different time frames, we will analyze key levels, and also following that, we will take a look at gold. So you can see on dollar index, right, ever since the start of November, right, or end September, it has been on a climb, right, when markets are anticipating Trump's victory and also potentially, a stronger dollar with the inflationary policies ahead, because Trump's policies with the tariffs, right, it tends to drive prices higher. So this also means that it could disrupt the Fed's plan to cut interest rates, right? So in that sense, when inflation goes up, then the Fed's fight against inflation might not be over, and they could slow down or ease the whole process of cutting interest rates. So that in turn supports the dollar, which is why we have been seeing that climb ever since the start of November. Right, so if we take a look at dollar index, right, on the daily time frame, you can see that just with the most recent price movements, prices are still in this bullish market structure. And so the way I take a look at this is that I take a look at the most recent price action, and I just highlight the peaks and troughs, right, or the turning points. So if you take a look at just mark out the recent price, you can see that prices are still forming this higher lows and higher highs that we're seeing, right? So you can see higher lows and higher highs really comes in the forms of higher peaks, which are formed over here, the ones, right, that I've highlighted, as well as the troughs. So let me just put that in a different color so that it's easier to see them. Right, so you can see that the ones in blue, these are the troughs, right? So you can see in general, when markets in a bullish structure, it continues with this higher lows and higher highs. So in terms of the key levels that I have on the daily time frame, we can see that this is the first key level for me, right? Even at the 107.50 level. So this is the region. Why I identified this as the first support level, potentially, it's because of how prices congregated around this level. We're seeing that consolidation before a strong break to the upside. Right, and for those of you guys who attend previous session, for me, this itself, right, when there is a doji, you can see this doji over here. This doji, right? So this small area of consolidation or that hesitation before the break to the upside, which was also characterized by a very strong bullish candle. You can see this candle. If you take a look at the wicks of this candle, right, the body of this candle makes up a majority of it, whereas the wicks are just very small. Right? You can see that what this also means is that there is sustained buying pressure and the opening price and the closing price and the high, it's relatively close to one another, right? So this shows the sustained buying pressure. So for me, this area could serve as a potential area of support, this zone over here, right? To be more precise, instead of a specific level, this area here. And you can see that this is at about the 107.50 level. Prices are hovering around this region, right? Really consolidating around the 107.50 region and the high. So this high, it's that 110 area, right? You can see that this was also a high, interestingly, right? Identified before the pullback. So this high was actually identified in our other analysis. Over here, you can see that how I obtained this high, it's really just taking the 100% Fibonacci extension. And so for those of you guys who are not familiar with what a Fibonacci extension is, the idea is basically, right, to identify zigzag patterns that we have, right? So these are examples of zigzag pattern that we can find in price movement and trying to project the zigzag pattern, right, using this turning points. Right, so in this aspect, you can see that this is the zigzag pattern that was identified prior to that pullback, right? So this was the zigzag pattern here. And like I've mentioned, right, we use the turning point. So this is the first point, the second point, and the third point. So we use the turning points to project the Fibonacci extension. Now, the other question that might come up is how do you actually do that, right? So now that we've identified the zigzag point, which is this 3 points, we want to take a look at how we can use the Fibonacci extension tool on our Exness web terminal, right? So how we can do that is to take a look at the third icon that we have over here. Just click on this. And I have the Fibonacci retracement and Fibonacci extension, right? I've included them in the favorites toolbar so that I can get easier access. So I get them below as well. But if you want to just access this from this page, you can actually do that, right? Just click on Trend Fit Extension. And once you have that indicator, right, just click on the turning point. So this is the first point over here, the second point, which is the high, and the third point. And you can see the 100% extension lies at about the 110.20 level, right? So if we want to round off, it's really just this region, right? So 110 to 110.20 area. So this area here. Okay, so this is the 100% extension. Now, what this also means, it's that the projection of this move, right, or rather the extent of this move, you can see here, right? So this move from the low to high, the one in blue that we have, right? I'm going to take this, copy it, paste it, and you can see that the extent of the rally is similar, right? So 100% extension basically just means that this rally that we observed back in November, right? So the early part of November, all the way up to the 22nd of November, that extent of this rally is similar, right? When you project it starting from December, right? So it's the same, which is why it means 100%. So the extent of this rally that we have over here, the one in blue, is similar to the next move that we saw. So after we saw the price actually pushed into the 100% extension, this zone, right, also the 110 level, it's just based on key support resistance levels, right? So over here, we saw that price pulled back slightly. It is still hovering within this range, as you can see. And in terms of market structure, you can still see that higher lows and higher highs being formed. So for me, right, unless price breaks below and closes below the 107.50 zone, right, this whole direction is still bullish. And the other thing to take a look at, it's just in terms of how prices are forming this potential channel, right? We're seeing this ascending channel that's being formed here, right? So this area, right? So for me, this is not the best ascending channel just because of how price did not actually tap into the lower and upper bound twice. Right? You can see that price tested the upper bound twice over here. We have it once and the second time. But in terms of the support levels, right, not so much, right? We could be seeing a potential support, right, and a reaction here. But until it has been confirmed and marked by a higher high, right, for me, this is just a general consolidation. Okay, so we have a 107.50 support zone that we've identified just based on the consolidation, as well as the doji observed over here. And the second level is the 110 level, which we saw as a resistance based on the 100% Fibonacci extension. Right, of course, beyond that, the next potential level is the 127.2%, right? Again, I round it, so 111.30 level, or if you want to be more precise, right, 111.50, given that this Fibonacci extension is nearer to this level. right? So these are the two levels. And then if price breaks below the 107.50, what this could also mean is that we could see a steeper decline, right? And a potential retest of the next support at 105.80. Now, 105.80 was obtained because of this move. You can see that this was a very big pullback that price experienced. We saw the consolidation and a strong push to the downside. And then following that, we saw that price broke to the upside, retested this level again as a support before it continues higher. So for me, if price breaks this level, the next potential support it could decline to is this support level over here, which is the 105.80 level, just because of how prices tested it as a support and also as a resistance previously. Right, so these are the key levels for me on the daily time frame. If we move down to the 4 hours time frame, right, just focusing on this movement, you can see this area over here. So I'm going to highlight this leg in pink and we will move down to the 4 hours time frame. So on the 4 hours time frame, you can see that with the most recent price movement that caused that pullback, prices are still in this bearish structure, right? It's still forming a lower lows and lower highs. And you can see that from this move as well, the most recent move. So for me, I think that price could still experience short-term weakness, right? Potentially pushing into this low at a 107.50, right? This area over here. But we have to also bear in mind that the bigger time frame, if you take a look at it on the daily, right, there is still no shift in market structure, right? As I've highlighted earlier, right? Even if you take a look at it in terms of line chart, you can see that price is still forming that higher lows and higher highs over here, right? We're seeing that consolidation and potential area that price might be testing. But until there is a very clear shift in market structure in terms of the break of the last low, right? You can see that this is the higher lows and higher highs. You have this, right? So for me, price is still holding within the zone. And if you take a look at it in terms of the candles, this is the low that we have over here, right? So until price actually breaks and closes below that, right? For me, this is still bullish on the higher time frames. But it's also worth noting on the 4 hours, right? There is no clear shift in structure. So what I would want to see pushing into this support zone is again that shift in market structure for price to move higher. Okay, so this is on the 4 hours time frame. You can see over here, right, prices are still consolidating, and also a lot of it is really more fundamentally driven, right, given all the policies or all the actions that we are seeing surrounding Donald Trump. So with that, right, let's take a look at so this is my view on dollar index, right? So let's take a look at the other setup, right, which is on gold. So we have requests for gold, right, and also a few questions. Okay, so we have a goal. Okay, yeah, so let's take a look at it. Right, so please analyze gold chart as it formed a pennant pattern on the daily time frame and it broke targeting the 2918. Means there'll be a global mass or dollar will go weak. Okay, so yes, let's take a look at gold chart, right? It's also interesting to note because gold itself is dollar denominated, right? So this also means that if dollar is strong, as we saw, right, in the previous 1 to 2 months, right? The November run up all the way into for the presidential race and also into December, we can see that dollar has been pushing higher. And as a result, gold has been consolidating, right? So let's take a look at gold chart. And also another question by Manoj, right? What will happen if Bitcoin if Bitcoin reserve will not be created and why Ethereum prices is not crossing an all-time high? So we'll take a look at those charts as well, right, on Bitcoin and Ethereum, right? One thing to note is that there's also a lot of optimism surrounding Bitcoin, right? So there's this idea of buying the rumor, selling the news. So given all the optimism and also, you know, the whole anticipation for crypto-friendly policies coming through, so that could also be the reason why Bitcoin prices are climbing, right? In terms of whether the Bitcoin reserve will be created, for honestly, that would really depend on policies, right? So we can take a look at it from a technical perspective, right? And from for Ethereum as well. Okay, so let's take a look at gold first, right? Since we talked about dollar index, right? So gold is also linked to dollar strength, right? When dollar is extremely strong, you can see that gold tends to be weak. We saw that consolidation over here, right? Recall that just now we mentioned that in November, right? November run up, we have dollar strengthening, and look what happened to gold, right? You're seeing that consolidation around gold over here. Like gold prices are also holding because there are other factors that are driving this increase in gold prices, not just the dollar, but also other factors like your demand, right? Central bank purchase, that's also one. So when central banks start ramping up their gold reserves, you can see that despite the strong dollar, right, it also keeps gold prices much higher. as compared to the start of the year, right? So if you take a look at 2024, the whole run-up is very impressive. And gold, it's also a hedge against uncertainty. So especially when there are very uncertain political moves, right, or geopolitical tensions around, then that's when you can see that gold tends to benefit from its safe haven status. So those are a few things to note, right, in terms of the fundamental side of gold and what has been driving prices. Now, if you take a look at it from a technical perspective, right, if you take a look at it on the daily time frame, you can see that gold, it's really has been just hovering within this range, right? The much bigger range that we have, it's really this area here, this boxed up area that we have. That I put it in blue. You can see this range, right? Price holding it as a resistance. Even now, right, price did not actually break above this high, which is the 2720 region, right? We saw a spike test this level, so a lot of it is really dependent on whether price is able to close out of this high. That's one. And also, right, previously, there is this move over here. You can see that this ascending channel, which I believe that prices are still holding within this area over here. So if I were to extend this, you can see that prices are testing the top of this ascending channel that we have. And so these are the ones that I observe on the daily time frame. Let me just remove this levels, right? I believe these levels are on the lower time frames, but on the higher time frames, you can see that you have the high over here, which price tested multiple times, right? And also swept slightly above this high. You can see these two highs that we observed at the 2,720 level. Price swept slightly above this. It pushed into this ascending channel's resistance over here. So that's one thing to note, right? And then also we have this region, this area here. Okay, so this is what I believe what you mentioned, right? In terms of the pennant, you can see that price broke out of this, right? So this, it's also an area of consolidation. So you can see that a pennant, right? When price breaks out of it, right? This is usually a continuation pattern. So you can see that price has been on a strong uptrend and it consolidated, and we're seeing that break to the upside over here, right? So these are a few things to note, right? Just in terms of what we observe on the charts. Now let's take a look at the lower time frame, right? So we have a few things to note. We note that price, it's in an uptrend. You saw that it broke out of the pattern. It's also testing the lower time frame, right? If you go to the 4 hours time frame, you can see that it is testing the upper bound of the ascending channel. So beyond the break of the pennant, you can see that price, right, has been forming this rather staying within this ascending channel pretty well, right? It is on the 4 hours time frame in a bullish trend. You can see just based on the higher highs and higher lows that were being observed. If I take a look at it on the line chart, you can see that as well very clearly, right? If I were to highlight the peaks and troughs, you can see here, right, the peaks. So as we have mentioned before, in an uptrend, right, prices are going to continue forming your higher lows and higher highs. What is also interesting to note of this is that you can see that the lows are not broken, right? Notice that every time price did a pullback, it does not actually break the previous low. So this is one of the characteristics of an uptrend, whereas the same goes for a downtrend, right? You can see that prices form lower lows and lower highs. And this is an example, right? On the lower time frame, you can see this here, lower lows and lower highs. And when it marks the end of the downtrend, this is when you can see that this pattern is being broken. Price no longer hold below the last high, and it starts breaking above it and forming that move. So at least on the 4 hours time frame, right, it's holding within the ascending channel. We could see a slight pullback, but it's still holding above this last low that we have, right? But this also suggests on the 4 hours is that this bullish momentum could still continue. Okay, so that's on the 4 hours time frame. You can see here, right? So this is this market structure, right? The idea is very simple, but it's very useful in terms of understanding when we have that shift or we have a deeper pullback, right? It's also worth noting, right, that price on the higher time frame, it has pushed into this peak, and this was a high that was observed on the daily time frame, right? The 2720 level. Notice what we talk about liquidity sweeps, right? I talk about how price sweeps slightly above this highs here, right? So in a strong sweep, you can see that price will consolidate around the high before it sweeps above it. And if it breaks below and starts forming this structure, right, then there's an indication that price could have or experience a deeper pullback on the higher time frames. But at least on the 4 hours, right, that's not what we're seeing at the moment. You can see this is still in a bullish structure. There is no break of this low, right? So I wouldn't go as far as to anticipate that move before that price action shows itself here. Right, so this is the high that we have. Right, if we take a look at it just in terms of the support levels on the 4 hours time frame, you can see that the lower time frame, right? This is a key support level, just based on the last high and low. You can see this level here. So the 2,680 level. Let me just highlight this. Okay, so this region over here, this area, right? Just in terms of how it's going, it lines up with this lower bound of the ascending channel that we have, as well as the EMA 78. You can see this area over here, right? The one in red. So EMA 78 and EMA 21 is, you don't have to use these numbers, right? Can really be any numbers. You can use 50, 200, right? The idea is just representing the shorter term and longer term moving average. You can see the green one is EMA 21, right? In this case, this is probably not the best because it doesn't, you get a lot of false signals from here. You can see that price width slightly below and then goes higher. So this is really more of a trend following indicator, right? But at the same time, right, in this case, because it's so sensitive to price changes, right, we can see a lot of false breakouts. So for me, right, looking at a moving average is not really looking at just the crossover, but also incorporating it with market structure. If I'm seeing that the moving averages are tilting lower, we are also seeing that bearish crossover with lower lows and lower highs. And this is an indication that we could be seeing that change in momentum. But as of what we have now, you can see that prices are still forming the higher lows and higher highs. You're still seeing the moving average, right, holding the shorter term one, holding above the longer term moving average. And also prices are holding above the 21 EMA, which is the one in green over here. And so if we do see that pullback, right, I think that price could, as long as price is still in this bullish market structure, we could still see potential for further gains. And so this is where we are right now. You can see that this is the 2680 level, the support level over here. Okay, so this is the support level. So this is the first support level, right? And of course, beyond that, right, if price breaks below this, you can see that in terms of the structure, this is your last, the next low that we have, right? This low over here, again, just based on this movement. Right, so you can see that if price starts breaking below this structure, right? If it breaks below it and forms lower lows and lower highs, then what this could suggest is that we could be seeing a deeper pullback on the daily time frame, right? So we're on the 4 hours now, it's still bullish. So if you do see that deep pullback, right, on the higher time frames, right? Take, for example, this whole move that we have in blue. So if you see that 4 hours, you can see that it forms lower lows and lower highs over here, right? And if I were to go to the higher time frames, the one again on the daily, what we can observe is that you can see that this whole pullback that you have on the daily, it may just seem like one push down, but it's really reflected in your lower time frame. So just take a look at this blue highlighted area that we had, this area here. If I move down to the 4 hours, you can see that the whole pullback was marked by lower lows and lower highs. Right? So what this also implies is that every time you see any form of reversal on the higher time frame, you actually see that happen or play out on the lower time frame, and we can actually take part of that moves. Okay, so this area here, you can see the lower lows and lower highs, even though it's just one straight move down on the daily, right? You can actually observe that on the lower time frames. And then what happened after is that there's a very clear break and shift in structure, a break to the upside before price continued higher. Okay, so that's on go, right? These are the key levels for me on the 4 hours time frame. You can see that this, it's the 2680 support level, first level that coincides with the ascending channels lower bound, ascending channels lower bound. And then price, it's currently testing the 2720 resistance on the daily. It's also an area that coincided with these two highs that was observed on in December and November, right? So if you take a look at it on the, based on the candles, you can see these are the highs that we have, these two areas here. Right, these two areas, and we have that price wick slightly above it. And if price breaks below 2680, right, then a deeper retracement towards the next support that was tested here and also here, right, this area. So this comes at about the 2650 level, right, 2650, this area here, so this region. So this area in blue, right? So this is the area. Now, so these are the two support levels for me, right? I will remove the 2600 level because it's too far down. Right now, if you take a look at it in terms of the resistance, we have the 2720 that prices are currently testing. And beyond that, what would be the next potential level, right? So if we were to just take a look at what we have to the left of the chart, you can see we have a high that was formed here, right, at about the 2780 region, 2780 level. This high over here. This is just a graphical high that we have. And if we take a look at it just in terms of the Fibonacci extensions again, right, identifying the zigzag patterns. Let me just remove all this marking so that we can see it clearer. So if we take a look at it in terms of the Fibonacci extension, really identifying the zigzag patterns, you can see that this is the zigzag pattern that we have, this area here, right? And if we to, again, use the turning points to identify it, right? Recall how we used it earlier. You take the third icon, trend fib extension, and just paste it off the turning point. So 0.1, the high and the low. Right, so you can see that the 100% extension is lying just slightly above it, this area here. And then beyond that, right, we don't really have much, right? You can see the 1.272 extension, this region is slightly below. So this area here. So for me, right, if it comes to Fibonacci extension and just graphical levels, the key levels would be first based on graphical, right? So this is a high that you can see price respected, right? Or we saw that strong rejection over here. So this area for me, right, it's the key level. Of course, if price lies just slightly below it, we have a key level in terms of Fibonacci retracement or extension below it, then that would be an area to consider, especially if you are taking your profits. But in this case, right, key levels, this would really be the the level over here. Right, so that's on go. Right, so I hope that, okay, that's great, right, that it's the same pattern. Okay, I saw that you raised your hand, Yogesh, right? You can just put your questions in the webinar chat or the question chat, right, in the chat box. So if you have specific instruments that you want us to analyze or any questions regarding the instruments, right, just please put them in the chat. Okay, so the next one that we want to take a look at would be on Bitcoin and Ethereum, right? That was requested by Manoj. So let's take a look at that. Okay, so that's a great question, right, Yogesh? So, okay, so Yogesh question is, should I consider wicks in the candle when checking the channel? So in this case, right, when you're checking the channel, for me, right, there's no hard and fast rule on it, but I would consider them if we have a majority of the wicks that are testing this level. But if not, right, you can take a look at the closing, open and close price. But for me personally, I do consider the wicks just because the closing and opening price would change, right, depending on the time frame that you're on, which is why I consider the wicks, right? Because if you take a look at the wicks are basically considering the high and low, right? So the high and low prices. But for me, for a breakout of the channel, right? If you're looking at a breakout of the channel, then that's a different question, right? If you're breaking out of the channel, I want to wait for a body close above the channel. Okay, but when I'm drawing the channel in general, I do consider the wicks instead of just the body, because if I were to take a look at this, right? Let's just identify this, right? For example, you can see that on the 4 hours, if you look at this high here, for example, right? So the high that we observe 16 Jan. So let's say take a look at this high, you can see that the price of this will not change, right? Even across the different time frames, right? You can see here, the one that I've marked out. Let me just put this in a much thicker blue so that we can see clearer, right? So you can see this blue, right? Even if I were to shift it to the 1 hour time frame, you can see that the high doesn't change. Right, but at the same time, if I were to change it just based on the opening and closing price, you can see on 4 hours, for example, right? If I change it to the closing price of this, and if I move down to the 1 hour time frame, right, you can see that the closing price might not be the same. So which is why I think when you're drawing the channel, right, for me personally, I would consider it with the wicks. Okay, I hope that answers your question. Sorry, I think I lost the chat. Okay, there we go. Right, yeah, most welcome, Yogesh. Okay, so now let's take a look at Bitcoin as well as Ethereum. So let's take a look at that. And if you guys have any other requests as well, just put them in the chat. Oh, we have USD INR. Sorry, I missed that just now, right? Okay, let's take a look at that, right? This is quite exotic. I think we don't have it here. I'm sorry, I think we don't have it here actually. Okay, now let's take a look at Bitcoin. So on the higher levels first, right? So let's take a look at so okay, on the weekly, there isn't much, right? Sorry, I'm on the monthly time frame. So on the monthly time frame, you can see that prices are just forming your high lows and high highs, right? We have that slight pullback and then prices resume the trend. So on the monthly, you can see it's a strong bullish trend. If I move down to the weekly time frame, we're seeing the consolidation over here, right? In January, and also much lower activity, right? Because it's just the start of the year and we're approaching, it's after December. December's holiday season, right? You can see this. So nothing much on the weekly, nothing too different. No key levels potentially. Right, one other thing to note with this, it's that something interesting that you can explore, right? That I'm also using personally, it's we take a look at the most recent moves, right? So what we notice on higher time frames, we talk about bullish market structure, right? Higher lows and higher highs. Now, how do you actually apply this concept on the higher time frames, right? We talk about higher lows and higher highs, and every time price actually breaks above the last high, as you can see over here, right? This structure. But this also means that we notice on in a bullish trend, price does not actually break below the last low, right? So using the same concept, right, you can see that this candle that we have over here actually breaks and closes above the last candle. So what this suggests is that it created this as a potential demand, right, or support level. It's the same idea because notice that this whole leg that we have that breaks above the last high, this could be represented by one bullish candle on the higher time frame. Okay, so I hope that this concept is clear, right? Just tracking the last highs and lows, you can see what happens after is that this high, this candle, actually breaks and closes above the last high, which is this high here. So it created this as the last area of demand. So on the weekly, notice that price is still holding above this high. It's still holding up above this low. Sorry, not high. This candle, this low here. The low of this candle, right? You can see that price pushed into the demand zone and we're seeing that pullback again. So unless price breaks below this low on the weekly, right, for me, it's still bullish. Right, this is 88,650 level, this zone over here, as you can see, right, just based on the weekly price action, right? And just understanding this concept, right, of bullish market structure, higher lows and higher highs. If we take a look at it, you can see that this is the last demand candle that we have. You can see price push slightly deep into it, and then we saw that rebound again. So that's for me on the weekly time frame. So for me, the weekly is still bullish. We're seeing that price holding above this demand zone, like what I've explained earlier. So now let's go to the lower time frames. Right, so on the lower time frames, if you go down to the weekly, the daily, right? So for the benefit of those, right, daily just means that, one candlestick, the open high and closing price, it's represented by that specific day, right? So what this also suggests is that if you're on the higher time frame, if you're on the monthly, weekly, or daily, then this also means that we have much less choppier moves because each candle is represented by the move on the daily time frame, right? So you don't capture a lot of that 4 data points. It's just open, high, low, and close price for that day, as compared to, let's say, for 15 minutes, right? You get much choppier moves there. So on the daily, you can see that price consolidated. We're seeing this, right? So this move over here, price broke above that range, closed above it. And if you were to narrow it further, you can see that on the daily, right, this is the last area where we saw that hesitation before break to the upside. This is the daily demand, this area here, right? So if I narrow it, this is also an area where we saw the hesitation, a strong break to the upside, price retesting the support zone again. So that's on the daily time frame. If you move down to the 4 hours time frame, you can see on the 4 hours, right, we're really just seeing that area of consolidation over here, this zone. Yeah. Right, and of course, what we have, it's this low, right? So just based on market structure on the 4 hours time frame, again, if you observe higher lows and higher highs, you can see this here. This is the last low that we have that broke the last high. So if price holds above this low on the 4 hours, this area here, right, you can see that's still holding on to it as the demand, this zone here, right? So if I want to be more specific and narrow it on the 4 hours, it's really this area over here. Okay, so we have the higher time frame is still sitting on the potential demand over here, right? Let's see if there is any forms of chart patterns that we can observe. Potentially an ascending trend line, maybe, right? But not a convincing one for me, right? And also ascending channel. You can see this ascending channel over here. Right, so ascending channel, again, we need price to tap the lower bound and upper bound twice. You can see that price pushed into the lower bound once here, second time. So that's twice. We have the upper bound once over here and the second time here. Okay, so for me, price could be holding on to this ascending channel. We could see that if it regains that bullish momentum, we could see a bigger push to the upside potentially. Right, that's on the 4-hour time frame. Right, so now that we have identified the key support level, right, just based on the higher time frames down to the 4 hours, you can see that it's also a support level. Over here, let me just put this in a different color so that we can see, right, given that it's a black background that we have. And so 101,800 level, you can see this area. Oops. Okay, so this level over here, if I were to just stretch it back further, right? I've explained it just based on how the higher lows and higher highs that we're seeing, and also the last low, right? Given that it's in a bullish market structure, right? As long as this bullish structure holds, price should not be breaking below the last low. Now, if we take a look at it in terms of support resistance levels, right? Just based on the line chart, you can see that this was also a resistance area that price identified before it broke to the downside, and then we're seeing that break and retest of this as a support zone. So for me, right, on the 4 hours, prices are testing a potential support zone that we have over here. And then also, of course, a lot of it is also based on fundamental reasons, right? We saw the launch of the Trump coin as well as all this optimism surrounding the crypto space, right? So that's one. The other interesting thing to note, right, that you can actually track is the ETF inflows, right? So I'll cover that in a moment. But for now, you can just see that prices are still holding above this, right? So what I would like to observe on the lower time frames, right? You can go down to the 15 minutes or the 1 hour. It's just taking a look at the most recent pullback, right? So even though it's just a few candles that we are observing on the higher time frames, like the 4 hours, the most recent pullback, if you go down to the 1 hour or 15 minutes time frame, right, you actually see that this pullback was again characterized by lower lows and lower highs, right? So notice this pullback, this area that we have highlighted, this move. Right now, I'm on the 1 hour time frame. If I were to go down lower on the 15 minutes, for example, you can see that what happened, you have that shift in structure, right? So observe this, right? So on the 15 minutes, you have lower lows and lower highs, right? We're seeing that peak and trough coming through, lower lows and lower highs. And then what happened after is that price actually broke and closed above the last high. You can see here, right? Price swept below the last low, and we saw a break and close above the high. It pushed back into this area again as a demand. You can see this area over here. I'll put this in a different color so that we can see this, right? Let me just put this in green, for example, or white. Maybe white would be better. There we go, right? So you can see this area, right, where price broke and closed above the structure. What happened eventually is that price then came down to it, retested as a support and rallied higher. So for me, right, this on the lower time frame, there's a potential shift in structure. But more importantly, right, it's also following the higher time frames move, right? We identified that it's on a potential daily support over here, right? So if we see that shift, I think that if there is a clearer sign, if you're on the lower time frames, right, on the 15 minutes or even a 1 hour, right, you can see that price continues to form higher lows and higher highs. Then this is an indication that price is respecting the higher time frame support, and we could see potential for price to move higher. Right, so you can see over here, right, price also broke above the last high, this area, this high that we have, right? So we have potential for the gains here, right? So again, what we would like to see in a bullish market structure is price not breaking below the last low. So once you see that pattern coming through, you can actually play a retracement, right, or a potential pullback to a support level and for price to push higher. Okay, so I hope that in terms of the analysis and how we can combine across the different time frames, right, the thought process is clear. Right, so the next one we want to take a look at, it's on Ethereum. So let's take a look at that. And again, if you guys have any questions, just feel free to put them on the chat, right? We have US All as well by Ian. So let's take a look at that in a moment, right? So let's take a look at Ethereum. Oh yeah, and I also mentioned about the Bitcoin ETF inflows, right? So for that, you can actually just go to Farsight, right? So you can track the Bitcoin ETF inflows just based on this data. So in short, right, what this also means is that just let me just check that okay, you're seeing the right screen, right? So yeah, you can see that it's basically just showing the different inflows, right? Price the investors flow, right? So negative just means withdrawal for that day, right? So you can see in general, right, we are seeing that inflow coming through 755 million and 626 million, so on and so forth, right? 17th Jan. So yeah, so this is what we have, right? So in general, you can observe the sentiment from here. If we're seeing net outflows, right, then that could not support Bitcoin prices. But if you're seeing ETF just flowing through here over here, the net overall net inflow, right, then this could also mean there's more bullish sentiment surrounding this. Of course, we want to be also aware of all the other drivers, right? Not just fundamentals or technicals, right? You want to combine them together and also take a look at the latest development, especially surrounding Donald Trump's policies. Okay, so if you take a look at Ethereum, right? Ethereum, it's again on the higher time frames first. You can see on the daily, it's interesting because prices are currently hovering around this level. You can see that this was an area that price tested multiple times as a support on the daily time frame. You can see this zone over here. Just change this. As you can see this area, right? This was a support level that price held, right? And we saw that rally up again in the mid of November. What happens after is that price came in, right? We saw a spike to this level again, and then that consolidation in Ethereum, nothing much over here, right? It's also worth noting that if you are on the daily, prices are holding below this descending trend line and potentially a descending channel even, right? But I would not say that this is this area here. So you have that descending channel, prices are holding below. It came and test and pushed into this potential support and also the lower bound of this descending channel. And so we're seeing that consolidation over here, very muted movements, right? At least for the past few days, this area here. If we take a look at it on the 4 hours time frame, right? So for me, this area, right, we have the break above the high. You can see that structure, price broke above the high. It's currently pushing into this zone again, right? This area over here, you can see that this was an area. So for those of you guys who are familiar with fair value gap, the idea is basically when there is a very strong movement to one side, right? It created potential imbalances. And you can see this area, right? It's created with a strong bullish candle. And then what happens is that the first candle and the third candle doesn't overlap, right? The wicks of the first and third candle, as you can observe over here, it doesn't overlap. Right, so this created a potential fair value gap, price pushed into it, tested it, and we're just seeing this consolidation. Very choppy movements for me, if you ask here, right? Not the most ideal, but this is the support level, the 3,100 level. You can see this zone, right? And the bigger time frame support, which is also the lower bound of the descending channel, is this area. Right, so these are the key levels for me on the 4 hours time frame. If I zoom in, of course, we have this high that it's also coinciding with the upper bound of the channel, this area over here. You can see that this was also a region that we have, this area. Right, so for me, as long as price holds within this range, we could still see the consolidation. If we do see a break above this, so this high stands at about the 3,500 level. So this is the high, it's 3,500 level, you can see over here, right? So this area, if price breaks above this, right, you could see potential for further gains, but beyond that, right, I don't think price will probably see some consolidation. You're seeing that across in the EMAs as well. Okay, so I hope that answers your question in terms of the key levels. For me, this is really just an area of consolidation. It's holding above this support zone at the 3,000 level, also a psychological level, but also the area of consolidation that we're seeing on the lower time frames, especially on the 4 hours, right? This is the zone that we have. Okay, and the last one that we have, it's on US oil. Oh, sorry, I think we ran shortly past that, right? So just a quick one on US oil, right? You can see that on US oil, we saw that pullback, especially after the announcement that Trump could continue, right, or authorize the drilling of federal lands. So we saw that actually eased some of the supply concerns. Prior to that, you can see that oil has been holding in an ascending channel over here. You can see this ascending channel that prices are holding within this area over here. So I think that even with the most recent price action on daily, it's still in a bullish structure, higher lows and higher highs, as you can see. The first support level that we have would be at the 74 level, this area of consolidation, which also aligns with this lower bound, right? And beyond that, if price breaks, then 71 would be the next support. In terms of the resistance, we are seeing that pullback, right? And this pullback really comes in at the 78, 79 level, right? Around the 80 region, this area over here. Okay, so this 78, 79 level, and if price breaks above it, the next support level, just based on graphical level, we can see that this high over here that we saw back in July, this area, right, the 84 level, the high, right, before we saw that pullback. So the most recent price action on the daily time frame for me is still bullish, right? As long as price goes above the 74 level, we could see some area of consolidation before a break. But it's also worth noting that oil now it's very driven by fundamentals, especially if there's a huge amount of supply coming through, then we could see the shift in technicals. But until now, right, for me, technicals itself on the daily is still showing you that bullish structure, right? We could see potential for a deeper pullback, also impacted by the recent Trump announcements. So yeah, this is what we have on oil, right, on the higher time frames. Okay, so sorry for running over slightly, right? I hope that this answers all of your questions. And also please give us feedback, right? So at the end of the session, we have a feedback form. Please give us the feedback, and also the recording will be sent to you automatically, right? So as usual, right, please help us to fill in the feedback survey form, right, for topics that you'd like us to cover so that we are able to better tailor to your needs. Okay, so with that, right, that's the session by me and Inky, right? Thank you everyone for your time, and we will catch you guys again soon.
Thank you, everyone.